Okay, good. Well, I think we're all rehearsed now in terms of what we need to do. So welcome back, everybody, to the third day of the board meeting. We have got a lot of different examples during this week of projects at different stages in development. Obviously, we were looking yesterday at the final stage of the or the post-ED stage of the revenue projects, ED70, ED71. Today, we've got two different stages of development. Later on today, we will be starting work on developing our views on what we should include as additional projects through the mid-period work programme review. And then before that, we move now into natural resources, where we are in the middle of developing the consultation paper. And just in terms of context on timelines and so on, the aim is that we should be in a position to approve that consultation paper at our September meeting. And I think from a board positioning point of view, it's quite important that we do actually hit that deadline, because the whole sort of climate change, natural resources and so on is going to be a very important area, very much, I mean, it's very much in the news already, but with COP26 coming up in, I think, November, you know, it's really important that I think we are seen to be engaging in that area and that debate. And obviously we already have the staff Q&A, which I thought was very important last year. But you know, this could be an important contributor to the debate, and it certainly shows we're working in the right area, both, if you like, in that agenda, but also in terms of the importance of natural resources. You know, as IMF have highlighted, for example, in their work on government balance sheets and so on. So it feels timely, but we need to keep making progress on this. So I think with that short introduction, I might just pass over to Lindy to see whether, as task force chair, there's anything you want to say just before we pass over to staff to take us through the papers.
No, Chair, I don't have anything to add. Just thanks to the task force and staff for their work and support thus far. Thank you.
Okay. Good. So we move then into the item and the papers that staff have prepared for us. And I think, Edwin, you're starting off, and then we move to Amon when we get to the new chapter on living resources.
Yes. Thanks, Ian. Let me. Okay, so I'll just jump right into the papers. And the first paper is on the cost of activities related to subsoil resources. So not exactly natural resource, but what we looked at as a task force was whether to adopt the guidance from IFRS on evaluation and exploration expenditures from IFRS 6, and also development and production costs. So that those costs are actually sprinkled in IS2, which is inventory, IS16, which is their version of PP&E, and also their version of intangible assets. As well, they have an interpretation specifically on strip mining activities. So I'll first talk about exploration and evaluation activities. And so that is covered under IFRS 6. And the task force talked about, whether there was a case for us to adopt IFRS 6. And we noticed that when IFRS 6 was approved, there were actually some dissenting opinions among the ISB board members. And they were not really 100% on side with the accounting guidance, because in IFRS 6, there's an explicit exemption from fully applying their framework. And also, a lot of board members thought that if they went with that exemption, then they could get to a place where they recognize assets that really do not align with their framework. The ISB has actually been thinking about reopening that standard for quite some time. And last year in July, they actually started doing some research, and they did some papers on what would happen to evaluation, exploration expenditures if IFRS 6 did not exist. And they came to the conclusion, or at least their staff came to the conclusion, that these expenses or these expenditures would likely be expensed, because in the exploration and evaluation stage, the commercial viability and feasibility of the project has not been demonstrated yet. However, in October of 2020, they've did further research and actually had outreach with their constituents. And quite a few of the users and preparers of financial statements provided feedback that even though it might not be 100% aligned with their framework, all the constituents said the standard does provide very useful information. And specifically, they pointed out that there is a tendency for similar sized companies to apply the same accounting policy choice. So, and by that, I mean in IFRS 6, there's a policy choice to either capitalize E&E expenditures or expense them when incurred. So based on these points that were raised by the ISB staff, the task force proposed that we do adopt IFRS 6, and for a few reasons. The first is, as we've pointed out in the project brief stage, there is a current gap in our literature, and it is applicable because some public sector entities are applying or do have shared agreements in the extractive industry space. So they would be engaging in exploration and evaluation activities. The other reason was that IFRS 6 does produce useful information, as the ISB staff pointed out last year in October. And the last reason is because we viewed this as an opportunity to align with IFRS. So for like transactions, our constituents would expect similar accounting outcomes. So, and also from a resource perspective, if we were to adopt IFRS 6, it wouldn't be that taxing on the staff resources. So based on those reasons, the staff recommend that we adopt IFRS 6. And before I hand it to the board, I just wanted to point out that we did receive one member comments questioning whether we should, because in their view, the ISB seems to be reopening up the standard for a possible amendment. But in response to that, I would just want to point out that they have been thinking about amending this standard for the past, well, over the past decade. So, in my view, I think we shouldn't really wait for them. We should say that we're adopting now. And if they do end up amending, then we can monitor how they're amending the standard and consider if we should pick up any amendments going forward.
Thanks, Edwin. So open the floor for comments from members on that proposal. Yeah, Mike, and then Lynn.
Thanks, Chair. So I'm just wondering, I agree with what's being proposed, but I wondered whether the word adopt is too strong. We're not adopting anything. We're simply applying those principles in the development of our own standard. So I think it's more a case of we're applying rather than adopting.
Thanks, Mike. So I'll take a round of comments from members. So Lynn, then Camira, then Lucy.
Thanks, Ian. I'm happy with the proposal. I just had a question. How actively are you going to monitor the IFRS 6 developments?
Sorry, Lynn, we're losing you.
I'll try again, hopefully. I'm happy with the paper. I just wanted to know how actively we will monitor IFRS 6 developments.
Okay, so if I take the round of comments and then go back to staff at that stage. So we log that question. Camira, then Lucy.
Thanks. I'm also supportive of the staff proposal, except for the separation between the guidance and the main standard for natural resources, especially for subsoil resources. I think it's important to keep that guidance together. So thanks.
Thanks, Camira. Lucy?
Yes, thank you very much, Chair. I agree with the recommendation of the task force in adopting the IFRS. However, just like Camira, I also dissent to the recommendation of not incorporating the guidance within the proposed standard on natural resources, considering that such guidance will provide further explanations on the accounting of specific mineral resource that are within the definition of subsoil resources. I think in my view, it is then appropriate to incorporate them in the standard to provide coherence and completeness to our constituents. Thanks, Chair.
Thanks, Lucy. Ajith?
Thanks, Ian. I was just wondering how the taking on this project will impact on the mid-period work program, and whether that will take off any resources from what is available for what they're thinking of in relation to the mid-period work program. Thank you.
Thanks, Ajith. So, Edwin, any immediate comments?
I'll address Lynn's question first. So I don't really have an insider's look into the ISB, but we are monitoring their agenda for any developments. So I know that the next time they'll talk about it is in their June meeting. So we are watching, or anytime they have an agenda item publicly posted about this topic.
So, I mean, just reflecting, sorry, Ross, go ahead.
Yeah, just on the point, and the one thing that I don't think has come out through the debate yet is how we might pick up IFRS 6. And I just want to caution against making a decision on where this guidance might go at this point, because we're not developing an ED, we're developing a consultation paper. So we don't need to decide that now. I think the point we need to highlight in the CP is this is an issue. We're planning on dealing with it, and we should outline options for dealing with it. I think it's quite a risky move to start to make decisions on what we want in a final standard on natural resources long before we've even explored the options. So I do caution against that point from a couple of members at this point. And just a reminder that we are in CP stage, not exposure draft stage. So it's more important that we ask the right questions and provide options in the consultation paper to get feedback from constituents. So I do caution against that one, and I did want to make that point. And I did want to note as well, the task force decided did discuss different options on how it might pick up IFRS 6 that we didn't want to get to until the board had actually considered in detail the paper you're looking at today. But to give you some insight into those discussions, they wondered whether we could do a separate standard, something with the current natural resource standard, or potentially even just provide a direct reference. Because in the discussions, we did note that there's likely to be no significant public sector differences between accounting for exploration and evaluation expenses between the private and public sector. It is a very private sector nature transaction. Although, as Edwin's noted, there are agreements with joint ventures with governments and public sector or private sector entities undertaking these activities. So I just thought that context might help for the instructions going forward, and that we don't tie ourselves into something before we've thought it through a little bit more.
Okay, thanks, Ross. So what I'll do is just sort of summarize a bit on what I've heard so far, and then make a proposal on the way forward, and then I'll, Mike, ask you to come in at that stage, if that's okay. So what I'm hearing from members is initial support for providing some form of guidance in this area. And so it seems to me, bearing in mind what Ross said, that we should express that in the consultation paper. And the way that, you know, we've tried to use consultation papers in the past is where the board does see a general direction of travel, that we should actually express a preliminary view. Now, we haven't got any in the paper at the moment, but I think there are areas there, and we'll come to that later in the discussion, where perhaps the board would feel able to express a view on the direction. And this sounds like that there would be the appetite for a preliminary view on this. Picking up on Ross's point at the moment, probably the preliminary view should be expressed in terms of providing guidance, and then you know, discussing the options. And we could actually ask for comments on that, because I think there is a question around usage and so on. You know, is this going to be by state-owned enterprises? Is it going to be by who might well be using IFRS rather than our standards? So there probably is something around a specific matter for comment there, which would help us in collecting information on some of the likely usage and you know, how we might move forward. That also has the merit of taking that approach, if you like. If you think the CP should be going out sometime, maybe October this year, that will then be open for comment for a number of months, and then we would evaluate what's been said. That would also allow us to then see where the ISB is likely to go on this, because they will be going out for an agenda consultation in terms of projects that they might add fairly shortly, actually, in the next few months. From what I've heard on that, they are actually providing a long list of projects and not making any recommendations. And I think probably some of that is actually just positioning in terms of where that board is at, because they're about to change, they're about to get a new chairman of that board. So they're in a sort of procedural issue, which is obviously the outgoing chairman, Hans Hugevorst, doesn't want to bind the hands of his successor, Andreas Barkhaus. So they're going out with an open long list consultation. And I think if we propose providing guidance in the CP, keep the options open at the moment, then that would allow us to decide both from a constituent perspective what might be appropriate, and also to test that against whether there's likely to be an active project or not. And again, that might dictate to us, did we go ahead with a limited scope aligned project as part of this project, or did we do something different? You know, so I think that's what I'd propose as a way forward, and just take comments from members on that proposal. Mike, go to you first.
Thanks, Jess. So I found Ross's intervention and your explanation really helpful. Thanks. I think it's important, and I agree with what you're proposing. I think it's really important that, because we haven't done a CP for a while, and some of us won't have done a CP at all, and we understand the difference between a preliminary review and a matter for comment. When I read through the draft document in our papers today, there are no PVs, but there is one SMC, and I said to myself, well, why aren't we actually forming a preliminary review and going straight to an SMC? And so I think we just need to understand what they are, and then, as you say, when we get to them, make sure we understand what we're asking.
Thanks, Mike. Ross, do you just want to clarify then what a preliminary review is, and what a specific matter for comment is in the relation to a consultation paper?
Yeah, Ian, and thanks. And Mike, that's a really good point, because even the staff, when we were drafting this, had to step back and rethink. It's been a while since we've looked at one. So typically when we were writing a consultation paper, a specific matter for comment is similar to an ED. It's an issue that we want to highlight and we want feedback on, and it's more of a comment on what's in the document. A PV, or a preliminary view, is really where the board has a very strong view when you're discussing a number of options. So typically in a consultation paper, the board would always have a preliminary view if it's come up with a definition on on something, it's defined. So for example, we're going to be defining what we think natural resources are. That's a perfect area for a preliminary view, because it's clear that it's not an optionality question, it's the board's view on what that particular definition is. They're also used sometimes when we might be describing options that we could take forward, but the board has a particular view on one of the options, and a strong view, and wants to highlight that to constituents. And the purpose of highlighting that is to bring attention to that specific view to the constituents, so that they can reflect on whether they agree with the board's view on that particular matter or not. So it serves a similar purpose to a specific matter for comment, but because the consultation papers are open-ended and often have 2 or 3 options for each issue, it's meant to highlight that the board has a particular preference for one of those options and outlines what that preference is and why. Then we specifically haven't developed a number of preliminary views on the living resources chapter as of yet, because the board simply hadn't had a discussion. And we're still in the exploratory stages on what aspects of that we want to test out, and we wanted to see where the board landed. So we didn't want to get ahead of the discussions of the board itself and set out what those views might be. There are some PVs in the subsoil resources chapter at this point, because the board's had a number of good discussions and we're starting to get direction on the board's views on that. Similar to SMCs, when we're doing an exposure draft, it is an issue in my view that's best left to when the board is getting closer to finalizing the document and we start to see where the consensus is developing and where the board has strong views on issues. And we make sure we're leaving time in the project to finalize those June, September in particular, when we're approving the document.
Thanks, Ross. And I think, from a constituent point of view, it's really important that if we can, as a board, indicate the direction we see the project going in, that we do that through having preliminary views. Now, expressing a preliminary view at this stage does not bind the board in terms of the final decision, because obviously we will review what our stakeholders say, and hopefully that will give us different information, broader background and so on. But both from a board and a constituent point of view, it's helpful to see the direction, and people can come back on that. If we don't express a view on the direction, then I think we as a board actually are not really doing our job. We should be actually saying, we've looked at this, we've discussed the information that staff have given, and this is the direction that we see. So, even if we are perhaps slightly split on an issue, I think it's still worthwhile trying to come to a preliminary view, or at least express the arguments, so that people can give us the feedback. And it is all about feedback on a consultation paper. So with that, can I just check whether members were content with the proposed way forward that I set out based on the earlier discussion? Okay, good. I see thumbs up from around the screens. So I think then the instruction to staff, and also obviously we'll need task force input from that, is to set that section up in the chapter on subsoil resources, and recommending that we, or proposing in terms of coming to the preliminary review, that we do provide guidance, articulating the options for that, and then requesting input on that. Okay. Fine. Okay, so Edwin, I think we move on to the next topic.
Yep. Okay, so the next paper is essentially an omnibus paper that goes through the changes to the introduction chapters 1 and 2 and the appendix to the CP. And these revisions were made to address the instructions from the December meeting. So one of the instructions was to have a roadmap, quote unquote, to clearly distinguish between the underlying subsoil resources and the related activities that are undertaken to develop or extract these resources. So that's what I have on screen now. This is included in pages 13 to 14 in the package that we've posted. And essentially what we've tried to do is we've separated the activities into items that had accounting guidance. So whether that's accounting guidance under IFRS or IPSASB, and those are shown in the top of the diagram. And so they include things like accounting for a mining license, either by the issuer or the government, or by the holder of the license. Also IFRS 6, as we've just talked about, and also the development of the actual resource. So capitalized costs that would fall under IPSASB 17 and IPSASB 31, as well as restoration liabilities. And then when we move over to the production stage, that will include things like revenue and actual inventories as subsoil resources are being extracted. So what we've tried to highlight in the bottom of the diagram is that the actual physical resources, which is the subject matter of the CP, is not actually covered by any accounting guidance. So in the actual write-up in the CP, we've tried to explain that that's really the whole point of why we're having this chapter in the consultation paper. So before I ask the board for input, we did get a comment from a member asking if some of these materials, so the roadmap and also the later discussion on a measurement, should be moved to a separate educational document or in some form of appendix, because right now their view is that the flow of the document is kind of interrupted by all these large discussions of things that are related to natural resources, but not really on point, specifically on the accounting for natural resources. So there's a few topics covered by this paper, but before I move on to those, I'll stop here and let the board provide input.
Thanks, Edwin. So you're looking for comments on that diagram specifically at this stage?
Yes.
So Thomas, you have your hand up.
Yeah, thanks, Ian. Just kind of want to support the diagram in general. I think in the CAC discussion in December, when we touched on the illustration to how the IPSASB board came to the decision whether or not to account for sovereign power, I think one of the aspects was that the CAC said there needs to be a little bit more clarity and a clear delineation between valuing the underlying resources compared with valuing the licenses, who accounts for what. And in that regard, I want to applaud staff for developing this. I think this is responding to what the CAC had in terms of a comment regarding the example and the timeline. Just one remark regarding the positioning of this. I want to remind the board and staff as well that obviously the timeline in general for developing recognizable assets from sovereign rights has overarching importance for kind of the accounting in general. Natural resources is only one example. Applicable would it be also for the right to tax as another example? So therefore, for that reason, the CAG also kind of proposed to take it offline or take it out of the paper and put it somewhere else. Might it be an educational paper, or might it be somewhere in the conceptual framework as an example or something like that? So going in the same direction as other comments as well. Thanks.
Okay, thanks, Thomas, for that background. I think I would caution taking things out and putting them elsewhere. If the diagram is useful, then we should use it to tell the story. And that's really a test of how useful the diagram actually is. So I think I would suggest that it is useful and that we make sure that it is used in the document. So I've got Lucy, Mike and Scott.
Thank you, Chair. I agree actually with the recommendation, and the amendments provided by the task force or our staff address all the instructions of the board. However, with regard to the ready physical access as a requirement to establish control over unextracted subsoil resource, in my view, the mere access to the land itself from which exploration of the mineral resources will be conducted, I think that already constitutes a physical access over the resources. And further, as long as the NTP may restrict others to its access, I think that clearly establishes control over the asset. Thank you, Chair.
Thanks, Lucy. I think you've got a bit further ahead than I was. I'm really just taking comments on the diagram. We will come back to that discussion in a minute. Mike and then Scott.
Thanks, Chair. So I agree with Thomas. The diagram has done what we asked it to do. So well done, Edwin. Thank you. And I agree that we should use the text that explains the diagram as you outlined here. And I did find, though, that whilst a lot of the stuff in the document about mining companies useful and interesting, I was maybe thought it was just maybe too much. But that's just a personal view.
Thanks, Mike. Scott.
I'm probably going to thank you very much. I thought the work by the task force was really good. And I think to maximize the value on the CP, I guess I'll take a different view than Mike. I think we need to help educate the responders on this, because this is an area they probably don't know as much about it as they should. And so I liked it. I think it helped educate me. And I think if we want a good response, we ought to, I'm not sure how it's formatted, even about where it goes, but I think it's very helpful. And I think we'll get a better response if we help educate our responders.
Thanks, Scott. One comment from me, if you like, as a member, to really help us, I think one of the things that for me comes out when reading the document is the key difference between when something's unexploited and exploited. Apologies, I was just waiting for a siren to go past outside. So actually, if you look at this diagram, probably given that the flow goes across the top, actually there's probably a stage 0, which is actually the unexploited resource. And that would be helpful just to put that into the flow up front rather than having it sitting at the bottom as it is at the moment, because it then becomes part of that logic flow through. And just, you know, I think then that helps in terms of making it more integrated within the rest of the document, but also helping to tell the story of the whole life cycle, and probably putting that whole life cycle in actually is useful context as well in terms of where the project focuses. So if we can do that, that would be helpful. Lindy, over to you as Task Force Chair.
Thanks. And I guess it's linking on to what you were saying, Chair, is that maybe we should also see about the whole license and the sovereign right discussion, how we can link the two, because it kind of starts there, and see if there could be some linkages or putting it together or locating it together. I also thought that perhaps we also just need to be clear that this is, we're explaining it, but it might not be the exact scenario in your jurisdiction or in your environment, because we also had debates here when we looked at it again that some activities could start earlier or later, and you know there could be royalties as well. So I think we also just need to put a disclaimer and say, look, this is not capturing everything exactly. There could be other scenarios or I think aspects that we haven't addressed, but this is just to give you a general view. And I think we also we can have a look at it, and maybe some of the detail we could shorten, because I do think the discussion is a bit longer, maybe just shorten it, but yeah, just more merely cosmetic stuff that I think we can probably look at further. Thank you.
Thanks, Lindy. Ross, you had your flag up if you want to come in.
I was just going to suggest that we take away part of Lindy's point there and put in some overarching language about jurisdictional differences, because there is quite a difference in the tax regimes as well for the private sector side, and we should probably link to that, because that will relate to the royalty payments and things like that as well, that do vary significantly by jurisdiction, and people might look at that diagram slightly different depending on the tax regime they're in.
Thanks, Ross. So I think probably there is a fair amount of drafting in that you can see in markup. I don't think we specifically asked in the papers for comments, but I just think it would be useful if we picked up, just had a quick look at the chapter 1, see if there's any other general comments. Detailed comments in the drafting can go back to staff outside the session. So please do provide those if you have any, but I just wanted to focus on that chapter 1 to see if there's anything else, any other matters that members wanted to raise in relation to that first chapter and the changes made on that. Yes, I've got David, then Camira, and then I'll go to Ross. So David first.
Thank you, Chair. My broadband is playing up a little bit, so that's why I'm off camera, but I am listening very carefully. I think I would just like to pick up a general point that Lindy made in respect of the discussion on the diagram. I still find this document far too long. I mean, we've only got to chapter 3. And so I think my general comment about chapter 1 would be, can the task force and staff look at it to see if it can be made crisper and shorter while still getting over the messages that we need to get over? Thank you.
Thanks, David. So I'll go to Camira and then Mike and then back to Ross, unless there's anything you need to pick up immediately, Ross. Fine to wait.
Thanks, Chair. I just had a minor comment about the that is paragraph 8, the numeral C, where there are some amendments to clarify why it is not possible to measure reliably the unextracted subsoil resources in general. So also in those paragraphs, the reasoning is, for me, is not very convincing. I think that the fact of estimates, that we are using estimates, is not like strong enough. It's not a strong enough argument for me to say that we cannot then recognize those unextracted subsoil resources. Maybe we can provide alternative to measure them as in a more prudent way. There are, I don't know, threshold of confidence, maybe just to recognize a percentage, just to be a bit more prudent in the recognition. But that is the only reason I was not very convinced on that. Thanks.
Sorry, Camira, are you on chapter 2 or chapter 1?
I'm in agenda item 6.2.2 in this section of other clarifications and the paragraph 8. So the staff is recommending to make some amendments into the drafting and providing some reasoning on why it's not possible to. So it's actually why unextracted subsoil resources cannot be reliably measured. And I think the arguments are not very convincing for me personally. So yeah, that is my point. Then
Okay.
I don't know if we will review then this chapter in detail. I can provide more
If we
comments.
I was trying to sort of manage between the document and the papers, and I think that actually is a memo forward for staff, is we need to be very clear that the papers need to follow a logical order and allow us to review a section of the document where you've made changes, so that we can walk through logically. And I just want to get any further comments out on chapter 1 at the moment. So apologies, Kamira, we will come back to your comment. Ross.
Yeah, my point was just to highlight, and I think this helps with partially of David's point, that in chapter 1, we will be looking at the section on government finance statistics and whether that can be made more crisp, and then develop more of an appendix on that like we've done in previous consultation papers. So there is some more rework to come that we could streamline this slightly. And we'll be working with Joao, and he's involved in the GFS process at the moment, following what's happening in the natural resources space as well. So that's kind of a dual prong approach that we're taking forward, and that's on staff's agenda. I just want to let people know that.
Thanks, Ross. I think that does come into the let's really think, there is a fair amount of background material. There's also material that is needed to tell the story, and maybe not all the detail is needed in the main section. So if we can please have a look at that. It's the classic thing that it's actually harder to write shorter. And now I think is the time to really look at that section 1 and work out what we actually need in the main narrative and what can be provided elsewhere by way of background material. And the same may apply to IFRS as well, actually. Mike.
Thanks, Jess. I wasn't sure if you were meaning the introduction chapter or chapter 1 itself. I'm assuming you're talking about the introduction, and if that's right, then I agree that the discussion about GFS, I think it was helpful. I don't mind if it stays here, Ross, but I'll do what's consistent. I don't mind. But I also felt that the introduction talks a lot about recognition, but then doesn't go on to talk a lot about what you do if you don't recognize. And I think the disclosure piece is important. If we end up not recognizing subsoil resources, then what are we going to do with the fact that we haven't recognized, and what do we do about disclosure? So for me, it was a bit too silent on disclosure. Thanks.
Yes, apologies. And even this is an issue in terms of, yes, I did mean the introduction, and I think that's basically, I always think with these papers, we have to be very clear about what's the story what's the journey we're taking people on, and what, and therefore in drawing this through, each of the chapters should have a purpose, which is then lands on a preliminary view or a specific matter for comment that gives the context both for why we've written it in the first place and helps the readers. So I think, in coming back, actually, if material doesn't help us with this is where I'm trying to get to in a particular section, then look at putting it somewhere else where it does actually make sense in terms of that argumentation. And it may well be that what's in the introduction and project overview, well, some stuff that's in there may be a more appropriate placed later. You don't need to fully explain all the issues right up front.
Okay. Yeah.
Lynn.
So I had the same comment as Mike on disclosures. I didn't know if my comment was on that chapter or on chapter 2, and maybe this goes to David's point about signposting and brevity and clarity on which chapter's doing what.
Thanks, Lynn. Yes, and I think that is, the kind of issue, if you like, is then, do you recognise or is there a disclosure required? And that can be mentioned in that sort of, at that kind of level, because you then reference forward to the chapter that we're going to see in June on disclosure. Over, Adrian.
Thank you, Ian. If I may go back to introduction and paragraph 7 and 8. Sorry, as I keep saying, I'm getting on a running train, and there might have been discussions previously, but I have an issue with these two paragraphs. As the paragraph 8 rightly states, the paragraph 7 addresses public finance management policies and not accounting for natural resources issues, okay? So there is a sort of a statement in paragraph 7 that is sort of I mean, in a way undermined by the reservations in paragraph 8. So what I think is, could we make it, I mean, shorter, just provide the principles for sustainable public finance management, and not go deep into the A, B, and C bullets of and D bullets of paragraph 7, because we're stepping into, I would say, it's not only public finance management issues, it's also highly political in some jurisdictions. So could we just stick to general principles in paragraph 7? Just add that, of course, the CP will not provide guidance on that, but it's just for sake of a reminder, a general reminder.
Thank you, Adrian. I think probably the way forward on that is if we think back to our overarching objective for our work of strengthening public financial management through adoption of IPSAS around the world. Actually, then there's a context which is that broader context, but also there's a way in which we can contribute to this, and this is the reporting segment. And as you say, then we can perhaps tread a bit more lightly in terms of, because I certainly could understand that if you look at some of what's in paragraph 7, it appears to be written as prescriptive rather than it's sort of, trying to pick up on best practice and so on. So I think if we can leave that instruction to staff that we need to be, any comments there are actually in the way of actually better information, contributing to strengthening public financial management and that kind of thing. Okay, so apologies for my lack of clarity in terms of where we were in the document. Are there any other comments members wanted to make just on the introduction and project overview? Okay, so Edwin, going back into the paper, do we need, sorry. Do you want to talk about sovereign powers now?
Yes, so yeah, apologies on the ordering. I essentially just used the order of the instructions from the last meeting for this paper, but in retrospect, it would have been better to follow the actual CP structure. So, on this slide, we're going to talk about the rest of the issues noted in paper 2. And the first one is the draft example on sovereign powers. So as you might recall from December, we got comments from both the CAG and the board on dialing back on the discussion of revenue recognition in the example and really clarifying how the sovereign power is separate from the underlying resource or related activities. So that's what we've done. And we've also moved the drafting to Appendix A of the CP. So I'll stop now before jumping into the other issues and see if the board has any comments.
Thanks, Edwin. And this is now on page 73 of the papers, isn't it? It's page 49 in the CP.
Yes.
So any concerns that anybody has about that drafting now? Okay, so I'm not seeing any flags. I think, though, we do need to reflect on the positioning from the point of view of this is actually a really important topic. So I think the question is whether, you know, this is the right place for all of that. So I think if we can have that you seem to have hit the nail on the head in terms of the drafting, but can we have a look at the positioning for next time round in the context of that general, what we need where to tell the story?
Yep.
And this is sometimes the case. You start off with an outline for a consultation paper that you think will work, and then we do need to actually tweak and so on as we go through, because it is not a linear process. And as the debate and discussion emerges, sometimes you do need to consider reordering and so on. So, you know, if staff feel that positioning is wrong in a particular case on the task force, then we should actually consider that. Okay, so we move back into the paper then.
Yep. So the next issue we've already touched on is really talking about the PFM issues, and that was in paragraph 8, and we've already touched on that. So I'll let the board have time to comment on that if there are any other comments.
I think probably on that one we need to see, you know, the revised drafting in that introductory section, consistent with the comments that Adrienne made, and linking it in with our overall objective, I think.
Okay, the next issue is on clarification of whether a subsoil resource is a resource. So as you recall in the original draft, we didn't really put a lot of emphasis on that because our conceptual framework actually lists subsoil minerals as an example of a resource. But I've added in analysis now to look at the definition of a resource as stated in the conceptual framework. And essentially, the definition says that it's just any item that has service potential or the ability to generate economic benefits. So we concluded that a subsoil resource is a resource even before it's extracted. I'll stop there before I go on to control.
Okay, so Camira, do you mind if you just remake your comments at that point in time?
Yes, my comment was not about the resource, but more about measurement. But should I comment yet now or later? But basically, so I'm fine with the amendments that were done in terms of resource and also in terms of control. I have no comments. It's just on the part of measurement, specifically paragraph 2.36.
If we can come back to that in a minute, Camira.
Yeah. Okay.
So,
yes.
Because what we're trying to do is follow the logic flow through in the framework, which is actually, do you have something that meets the definition of an element? If you do, then do you recognize? If you recognize, how do you measure? So that follows the order of the chapters in the conceptual framework. Okay, any other comments on that, what's been done there in that section or in the actual, and this is, so then I want to just move into the actual documents as well, I think at this stage. Is that the right thing to do, Edwin?
Sure, so the discussion is on page 49 of the PDF package. So that would be page 25 of the CP if you're going by just the CP page numbers.
Okay. So this is 49, page 25, is that right?
Yep.
Any comments on that section? Okay, so as we're now in chapter 2, Camira, can we come to your comment then, please?
Yes, thanks. My comment was more on measurement in terms that, okay, after all, reading all the reasoning behind, okay, if it's an underlying, so if the subsoil resources first are a resource, if there is control, and everything points like, okay, it should be recognized. But then when we go to measurement, then the arguments that we are providing is basically that the estimates are not reliable enough so that we can recognize the underlying subsoil resources. And I think maybe that is not, if we are basing on that argument, it's not enough, because in IPSAS we use estimates a bit in other situations, and that's not a problem, or that doesn't prevent the preparers from recognizing the asset. So that, yeah, I will suggest maybe just to rethink about it. So that's my personal opinion. I do think that those the unextracted subsoil resources could be recognized, even if the estimates are not 100% reliable, but those estimates could be a good basis for the recognition. Even another argument that the paper provides is that in the private sector is not recognizing the underlying unextracted subsoil resource. But maybe we should not compare us with the private sector, because private sector could have different motivations or different why they do not recognize, but maybe because they do not have total control of the underlying resources, or maybe for taxation purposes, they do not have an incentive to recognize those unextracted subsoil resources. But for the public sector, maybe it would be worse to offer the possibility to recognize if they do have the information. If there are studies that have certain confidence level, maybe they could take a percentage of that and make a recognition on the in their financial statement. So that is my view. Maybe just to provide the option to recognition. Don't close the door and say no, we cannot recognize them because the information is not reliable. Because maybe there are situations in which the studies are reliable enough to allow recognition. Thanks.
Thanks, Camira. So I think you've underlined in your comments, this is about recognition, the recognition threshold. And clearly in this, there is a big issue, because there are a lot of, if you like, resource-rich governments around the world. And the real question is, what criteria should be applied to allow them to recognize these amounts on their balance sheet? Now, there is a difference here, and I think this is back to Lynn's point earlier, between disclosures and recognition, but we should be very clear in this that the recognition threshold is generally quite high, and the question is, what is it, what guidance can we give on this, because this is a big issue. So we as a board have to be really, really clear on this, and it shouldn't necessarily be because it's nice, it's what's the objective measure here, and why is it recognition rather than disclosure? Why is that appropriate for governments if that's different to the private sector? So I will take some comments on this from members, and then I'm going to go to Lindy and as task force chair and Ross in terms of staff. So I've got Adrienne, then Mark.
I just want to support Camira. I think she's getting at an important message. I'd have a lot of sympathy for leaving open the possibility of recognition. I made the point during the task force, but I don't know how much to emphasize it, but I think we're underestimating the quality of the estimates that exist in some cases. So I would be on the same side as she is in saying, can we leave open the possibility of recognition? Thank you.
Okay, I'm just going to take a round of comments. So I've got I'll take Mark and then Mike, and then I'm going back to Lindy.
First of all, I'm absolutely not an expert in measuring subsoil resources coming from a country which is not that rich, and I absolutely let myself convince in any direction. I think if we say, I mean, there are sort of two ways you can say if it's measurable, you can recognize it, and you have to leave it to the special case jurisdiction to assess whether it's measurable. Or the second opinion, you can say it's not measurable at all in any case. If you go for the second route, I think it's, and that's what I highlighted in the task force, and I think it comes back to Camira's point. If we say it's not measurable at all in no case, then I think we really have to come up with credible source. And I mean, this in 236 there is say that browse preparers and auditors in the privacy have not been able to rely on these estimates. I mean, this is a useful information, but I think it's important to know where it comes from. It may even come from an ISB document who has conducted research on it. And if we come to the conclusion we are talking about the same problems as the private sector, so if the companies really tried to measure it and they couldn't, then I think it's a very useful information. But I think we should also refer to it earlier. And the second is also, I think, was also what Camira said, and I also think it's important. Measurement uncertainty, we already have estimates in IPSAS 19, and I think we must make clear if we come to the conclusion it's not measurable at all, of why these kinds of estimates really differ from those other estimates. In IPSAS 19 will still come up with a number in the balance sheet. I had discussions with staff, and I think staff is also aware that the link to IPSAS 19 is an important one.
Thanks, Mark. To Mike, and then to Lindy and Ross.
Thanks, Chair. And Mark, that's a helpful contribution from you, I think. So I suppose I'm being maybe too conservative of an auditor here, but if it can be measured and it can be audited, then I'm happy that we apply that principle. I think it's important we simply apply the principles that are already in our conceptual framework. I don't want to move away from what the private sector may be doing unless we've got a very good reason to do it. And I wonder, Ian, whether this isn't an area where we would have a preliminary review or an SMC to get feedback from constituents.
Yeah, I think it is, but I think we just need to take this debate somewhat further, because basically the question is, do you rule out recognition at any point, or do you allow the possibility of recognition? But if we do that, we would have to be extremely clear as to what the criteria are for recognition, because there's a reputational issue here as a board for us, which is that, you know, this could just be seen as this is a very easy way of government sorting their financial sustainability issues. You just whack a load of natural resources on your balance sheet and you're fine. So, you know, if we're going to allow the possibility, then we have to be very clear about what the threshold is that you have to meet. Otherwise, we've got a real reputational issue here. And in practice, this standard may just be a charter for anybody to do what they want. So I'm going to go then to Lindy, and then I'm going back to Ross, and then I'll take other comments from members.
Thank you. And I think there is an acknowledgement that there are reports and they have been generated and they are used, but I think they are developed for a specific purpose, and they're like for engineering purposes, and they're not developed for financial reporting and accounting purposes. And I think we need to be very careful if we acknowledge that such information can be included in the financial statements. And that's why we ruled it out, because we said they're not prepared with the financial reporting objective in mind. It's actually considering other elements or aspects that you wouldn't necessarily include. And I guess that the other comment I was going to make up front is, so we did feel that there wouldn't be instances where you would recognize these because of the measurement uncertainty. And whether or not this should be a preliminary view or not, or do we put another option in or ask constituents to give us their views of when this type of information should be included or not. I guess it's a question that we need to address, to say, well, either we take this hard line or we ask questions, or we open to exploring further. But I do think we need to be very careful that we don't signal something that, you know, it just looks like we're giving an opportunity to include these things where we actually aren't sure ourselves whether or not this information would be reliable enough from a financial reporting purpose. And I don't know if we will be able to develop the criteria either. But I'll let you, Ross, see if that would be possible, or
okay.
Edwin.
So thanks, Lindy, for that. So I'll go to Ross. I mean, I think therefore there is a kind of question about tactics here as well, which is that we might have the option of signalling a hard line on this and then ask for information deliberately in order to provoke responses that would actually justify loosening that position. Ross, and then I'll go to Scott, Renee, and Bernard in that order.
Yeah, on this one, you know, it is a challenging issue, and I can understand the tension, but I think in the chapter, we really do need to think hard and long about what we want to say following 229 and 230, because this isn't like a normal estimate where we're talking about measurement uncertainty. There's three factors driving this uncertainty. One is, if we're, you know, to make it as simple as possible, we're talking about things that are under the ground. We have no idea of the quantity that exists at that time. So it may or may not even be there. It may not be economically recoverable. We don't know the costs to take it out of the ground. We don't know the metallurgy of what we bring out of the ground and what that will cost to turn it into something you can sell. And we also don't know what the future commodity price is going to be. So this isn't like an IPSAS 19 provision when you've got certainty 50% or more that there'll be an outflow of resources and you're estimating the nature and timing of settlement of that. You've got three variables here that are moving around with a very low confidence interval for all of them because they're based on future events. So maybe we've been a little too crisp in what we've said in 229 and 230, and we're not bringing out the challenges that exist. But I think, should we be on the other side of this and be saying we should recognize these subsoil items that we don't know what's there, we don't know its metallurgy, we don't know the future price of those. What we're going to get from governments is this is going to be really volatile. And if you even look at the mining and the oil and gas sector, they get huge write-downs and write-offs every year just related to their costs they've capitalized to build these items. We're talking about measuring the resources themselves and putting a huge number on the balance sheet based on significant uncertainty related to three variables. I think it's good to ask the question, but I do think at the moment, I haven't been convinced at all that we have much of a basis to make that. And I think at a high level saying, well, everything has measurement uncertainty, this is a different type of uncertainty. And I think we really need to be careful and make sure we add that out. And because at the moment, I think we're at risk of looking like we don't understand the issue at all if we say, well, let's just put this number on the balance sheet because there are economic models and there are geological models. That's different than recognizing an item in the financial statements and being able to reliably measure it. So we have to put our own framework to this. And I think where we are is the right place at the moment. Happy to explore further how we draw out the feedback we want and make sure we're getting the right input. But I think we do need to tread carefully here.
Thanks, Ross. So with that, I'll take additional comments from members before going back to Edwin. So I've got Scott, Renee, and Bernard, and Mike.
Thank you. And my comments I'm about to make are extremely tainted with 10 years on the IPSASB board and a board that's probably a little more willing to go to the disclosure side, maybe not the recognition side, but the disclosure side. I would encourage us not to conclude too quick on this topic. CP is a great opportunity to gather information. to what the art of the possible is. And one of the things we found through the IPSASB board was by challenging people, people actually came up with ways to measure things that you didn't think they had. And Mike, to your point, they were audited types of items. So if we go out too narrow in this CP and take away options, we're not going to find out what the art of the possible is. So I want to be realistic. I don't want to, I don't want to deal with the credibility issue, Ian, that you mentioned, but this is the opportunity to find out what is out there and what the possible is, and what is it recognition, is it disclosure? We talk about, we're going to have a next agenda item that's going to talk about sustainability. If you're nervous about this, wait till you get to sustainability. You're going to have that in spades. And so this is a relevancy of our profession, I believe, is that we need to get more comfortable with these, I call them technical terms, squishy numbers, because there's a lot of them out there. And I challenge us to go a little bolder on this, Ian.
Thanks, Scott. Now, I think just building off your comments, what we do have to remember here is we're talking about a number that can be audited and go in your financial statements, as opposed to items that can appear in narrative reporting, where there's a considerably lower threshold in terms of evidence required. And it's that narrative reporting which is going to build significantly in terms of environmental sustainability. It's also where we have our own guidance on reporting on financial sustainability, but again, that's in the outside the core general purpose financial statements. They're not numbers in the balance sheet. It is relevant information, but it's information outside the general purpose financial statements and the general purpose financial reports. So there is a significant issue here if we then say as a board, we think actually this is information that should go on the balance sheet, as opposed to there is relevant disclosure and it should be reported in the general purpose financial reporting, but it doesn't meet the criteria for recognition in the financial statements. And I think that's how we need to actually, we're going to need to land this argument is, do we seriously think as a board, this meets all the criteria for recognition in the financial statements at this early stage? I'll take Renee and then Bernard and then Mike.
Yes, thank you, Chair. I just wanted to share with the board an experience in our jurisdiction. Back to your comment, Ian, about the reputational risk. It's a real risk. It's actually a reality in our country. There was a couple of interesting articles written by members of the profession on that topic a couple of months ago, and I've heard some interesting, very strong reactions to what the article is proposing. And it referred to a Canadian project. It referred to the IPSASB project, this very project. And people are nervous about this potential impact that it would allow. It would open the door for governments to start masking their sustainability issues. So just wanted to share that with the board.
Thanks, Renee. So I've got Bernard, Mike, and then Adrienne.
Thanks, Ian. First, I wanted to say I fully acknowledge the challenges that are associated with that. And I agree with Scott that actually once we proceed to other topics, the challenges might not become less. But at the same time, I think to be honest, we are quite aware of the risk of a misstatement, in a sense that we might put too much on the balance sheet, but there's the flip side of the coin, actually, that there might be a misstatement by not putting something on the balance sheet. So I totally acknowledge the point that we don't want to create this kind of element where you can kind of put an arbitrary number on your balance sheet just to balance the accounts. At the same time, I think the issue that actually resources, natural resources, are a huge source of wealth for a government and the nation. I mean, we are not moving in a vacuum here. There are a lot of initiatives on resource accounting, on environmental accounting. There's a lot of initiatives going on the non-financial reporting side, and actually how they will impact the accounts at some point in time.
So I'm with Scott here that actually we should at some point really think about where our constituents are, giving all the cautionary things we have to do. But I think we are not moving in the vacuum here. So there's a lot of things going on, and I think we need to reflect that.
Thanks, Bernard. I think that comes out very clearly from this discussion that this, this needs to be located in that broader agenda. And I think it's absolutely, this is where we do need feedback from our constituents. So I think there's a reputational issue here for the board. There's also a tactical issue about how do we engage. But I think there's which position are we engaging from question for us. Okay, so I've got Mike, Adrienne, and then Todd.
Thanks, Chair. I think the discussion, as you say, has been really helpful and broad-ranging. But I'm persuaded by Ross's caution, and my view is that if disclosure is a better way to go to try and explain why you haven't put something on your balance sheet. I worry about debt equity ratios and other things that may be more private sector in concept, but they do get looked at in the public sector at a whole of government level. So my view would be a preliminary view that we don't put this on the balance sheet, but we ask for constituents' views by getting an SMC sold.
Okay, thanks, Mike. Adrienne, and then Todd.
I mainly wanted to clarify my position. It's not that we should be more aggressive than the private sector. I was interpreting what Camara said as saying let's be very sure that we don't rule out a measurement that is accepted by the rest of the industry. So I like the idea of just asking for more information. I'm not necessarily taking a position one way or the other. And that's in line with what Bernard said, that there are so many initiatives out there that I interpreted what Camara is saying as saying, let's be really sure that we're not ruling out something that other people are considering bringing onto the balance sheet. And that brings me to Ross's point, which is, I think saying we shouldn't do this because it's volatile is a different issue. Volatility is inherent in commodities and natural resources, and we will have to deal with that. Governments, natural resource rich governments have to deal with that anyway, but that's an issue of the fact that prices move around a lot, not an issue of whether the asset exists or not. So they're two separate issues, and they do both affect sustainability, but we have to consider their implications separately. And to say we won't put it on the balance sheet because we know it exists, but the price is volatile, I think is not the right approach. And finally, although I think it's a subsidiary point, my impression, although I'd have to check, is that the IMF government balance sheets that we're all interested and happy about, I think they probably use these types of estimates in constructing their balance sheets. So if we decide to rule out using this kind of estimate now, we're deciding to go in a different direction than the IMF has done with this balance sheet exercise. I think, I mean, one would want to check that. Thank you.
Thanks, Adrienne. Yeah, I think you're right that the IMF does include these in its balance sheet estimates. But then I think the other factor that's actually very relevant here is there is a very live debate in the statistical world about what you should actually recognise and what, and so, there's a number of moving parts here. But you're right to draw our attention to that. So if I can go to Todd, then Mark, then Lynn, and I'll come back to you, Ross, at that point, if that's okay.
Yeah, thank you, Ian. I've found the discussion really interesting on this. I think for me, we've got a conceptual framework here, and I think I haven't gone back to it because it's very difficult to engage in this and try and look for it online at the same time. But when it comes to measurement, it doesn't say in the conceptual framework that everything's measurable. There are some parameters around, measurement within the framework, and I think from my reading of what we've got in the consultation paper to date, I think it's pretty aligned in that with our conceptual framework. So I think it is important that where we land in the consultation paper is consistent with our conceptual framework. I think that is. So I would be uncomfortable if we were coming up with a preliminary view around this that didn't really link in with the conceptual framework, but agree that it is helpful to test this with our constituents. And so if we have got this wrong, let's find that out from them. But I'm reasonably comfortable with where we are right now.
Thanks, Todd. So I'll take Mark, then Lynn, then I'm going to go to Ross because you've been waiting, and then I'll take comments from Ajith and yeah. Okay. So Mark, back to you, and then Lynn.
Concerning Adrian's comment, I think it's very important that we keep our eye on what's happening in the statistical world, because obviously we are in a similar boat. We both need to have data and reliable data, whether the data is even there. And so I think this area is a very important one. And concerning, I like the way Mike said to the way forward. I definitely think we need to get the feedback, a very substantive feedback from our respondents. So because it is a reputational issue, and I heard many good arguments actually, but not just in the area of measurement. So I think we must be careful that if we lay out our arguments, that we clearly say what are we talking about. Are we now talking about measurement? Are we talking about subsequent measurement? There's the problem of fluctuation, that we are clear, or the danger of misstatements. I mean, these are all areas which are not really only linked to measurement. So I think we must have a clear structure. What are we talking about? And also the issue, what does it differ from the other estimates we are also using, like IPSAS 19? And I think then we have really a broad of arguments where we can challenge the stakeholders, and then we also get the detailed feedback back.
Okay, thanks, Mark. Lynn, and then to you, Ross.
So my comment was similar to Todd's. When I read it, I was relatively comfortable. If we're going to expand, though, a discussion about measurement, we ought to make sure we are consistent with the conceptual framework, and also the proposed measurement standard that considers what capacity are we holding the asset for, is it financial, operational, and that discussion isn't in there at the moment. So if we are going to expand on measurement, we should make sure we include that thinking in it.
Thanks, Lynn. I mean, I think we are in the measurement uncertainty area here, and that's probably back to Ross's earlier comments. That clearly, you're right, does need to be set in the conceptual framework, but I think it's actually more around the recognition chapter, perhaps, than measurement, because that's the question, that's really the threshold. Now that's a short chapter, so it needs to relate into measurement, the next chapter. Ross, to you.
Yeah, thanks. I think there's a couple of takeaways we need to look at in terms of getting the structure right, because actually I'm finding the discussion interesting because a lot of the points that are coming up are addressed in the chapter, but it might be how we're getting to the material that people aren't keying in on them, or we're not picking them up right. Because in terms of this, we're saying for financial statement purposes, we don't think you can recognize them. We're not ruling out disclosure, and we do think the disclosure chapter will talk about that. We also acknowledge in paragraph 232 and after the various different economic and geological models that exist that you can measure and how those are different from what we're doing. So I don't think we're saying in any right there's not ways you can estimate them. We're saying they don't meet the recognition criteria in the financial statements because you can't reliably measure them. And maybe we're not clear enough on that and we need to draw that out. I do think we're going to need around this discussion a link to the disclosure chapter that's yet to be written so that people pick up that we're not ruling out disclosure. We're talking about recognition. So that's a structure issue based on how we have the chapters now. But I think a little bit of the debate we're having is a little bit departed from what's in the chapter. And I think we've got to make sure that people don't jump to those same conclusions when they read the chapter themselves, because I think some of the essence of what we're saying is being missed at the moment, and we need to deal with that.
Thanks, Ross. Ajit and then Lindy. And then back to
Thanks, Ian. I think we are looking at subsoil resources. But apart from subsoil resources, there are also large areas of natural resources that we are not measuring. For instance, rivers that can be exploited, forests that can be used and exploited, and weather and environment. All these areas, all these aspects are also natural resources. So we are not measuring those, but if we, without measuring those, if we try to measure subsoil resources only, I think there is a mismatch, or there's a issue relating to what we're measuring. So that's one aspect that I think we need to think about, because we're trying to measure something that is not yet extracted, and there's a cost of extraction involved, there's uncertainty related to extraction. So those aspects are also there. So when it comes to natural resources, confining the measurement and recognition to subsoil resources itself, I think, is an issue in relation to the fair presentation and comparability of financial statements between different entities in different countries. Thank you.
Thanks, Ajit. I mean, obviously, people will need to review the chapters on the other areas, living resources and water alongside this. And in a sense, we're still focusing on the subsoil, and we need to make sure what we say there is consistent with what we say in the other chapters. Lindy, and then back to Edwin, and then I'll sort of sum up where I think we've got to.
Thank you. And I wonder though, if we need to, so we have quite a good discussion on asset as read these as assets and whether it does meet the definition of an asset. I was just looking at the conceptual framework again, and something we haven't explored because it's kind of new is we haven't explored the existence uncertainty in assessing whether it meets the definition of an asset. And I wonder if that's something we should include in the section on the definition of an asset, and kind of also then to Ross's point, include the fact that, you know, there is some existence uncertainty, and that may also drive you not to have this resource, which you then could or couldn't measure. But I think that's also something that did come out. Maybe we didn't explore it enough or emphasize it enough, that you could have something that you could maybe control, but because of existence uncertainty, it might not meet the definition of an element, and therefore even doesn't get into the discussion on measurements. I think we also might have to include that as well, because it is in our conceptual framework, and then deal with the measurement uncertainty in the next section. Thanks.
Thanks, Lindy. I think we will need to come back and have a look at that in the context of how the overall argument develops. Edwin, back to you, and then I'm going to sum up.
Thanks. So I have no problem with getting input from constituents, but I just want to point out, and I guess it wasn't really emphasized really well in the CP, but how I got to this conclusion is I was looking at what the geologists were saying, and the geologists themselves are the ones who are saying, even with the same data set, people can interpret it differently and come up with widely different estimates. So that's the problem, I think. It's the people the experts who are doing the measurement themselves are saying that they can't reliably measure this. So it's not really just an accounting issue. It's more of a science/geology issue, in that those experts, like the geologists and the engineers, are having trouble landing on a consistent way of coming up with an estimate. So I just wanted to point that out to the board before we update the CP.
Okay, thanks, Edwin. So I think this is actually been a good discussion. I think it's going to carry on being a good discussion, because we are right at the hard point of why we're doing this project. I think, given the context that we're working in, and we always knew this was going to be controversial, and I think Renee's comments sort of very much provide the colour on that if we had any doubt. It seems to me we absolutely have to have a preliminary view on this as a board. I think reputationally we have to give a view on this. In framing that view, clearly disclosures are going to be really important. Now, those could be within the financial statements, the general purpose financial statements, if you had an item on the balance sheet. They could be in the narrative reporting, if it's, in addition to something in the general purpose financial statements, or on their own if it's not an item that's actually recognised in the accounts that's more actually relevant in terms of sustainability. So I think we'll need to reflect that there will be disclosures that are required for a significant item, regardless of whether it's recognised or not. There will be differences in what's required, but there will need to be disclosures. So I think we go with that. I think the strategic question for the board, and it may be that this is a strategic positioning as much as anything else, not necessarily where board members would like to end up, but actually there probably is a strategic question as to, do we as a board think we should, for the sort of reasons that Edwin has articulated in the paper, rule out recognition and say we're in a disclosure only situation, or should we open the door a little bit to a situation where there might be sufficient information to allow recognition, and then give a principled way of that being approached? And I think that's the choice for us as a board. At this stage, and this is not committing anybody, but I think it would be useful just to have a straw poll in terms of where members are based on the current debate as to, if we have a preliminary review, would you rule out ever recognising natural resources, or would you allow certain circumstances where, if it met the criteria in conceptual framework, relevant standards, there could be recognition? Does everybody understand the choices I'm proposing there in terms of the preliminary view? So if I can just take a show of hands for the first option, you would rule out recognition. So Linda, you're in favour of that. Ajit, you're in favour of that. Okay, so I'm seeing, I think, 6 members on that. Those who would favour the second option. So Ross, I think that's a slight majority in favour of the second option.
Yeah.
Okay, so in developing the drafting of this section, we need to reflect that, but I think we need to build that material which would support that second option, because recognise this is a reputational issue for us. So I think we have to be absolutely rock solid on what would justify that. Okay, right, good. That's useful. I think that's helpful. That gives us a kind of, you know, how we should develop this. And clearly we're going to need to come back to that. And I think we'll have another look at where members are when they've seen the drafting, whether they're convinced by the drafting in support of that preliminary view. We may well need to actually record that fact that that's an unbalanced view. So again, we'll need to finesse that depending on you know, the eventual, where people's eventual views come out, but that's useful. So I'd like to move us on now to, I think, Edwin, are we now at the stage where we can move on to the discussion of the living resources?
There was a short point on control, but essentially one member asked, or one member said that they did not agree with our conclusions from December, and said that in their view, they don't have control because there is no physical access to the unextracted resources. So I've amended the CP to include that as an SMC right now to ask constituents for their view.
Okay, well, if we can come back to that one, because I think we need to have a look at the line of arguments in the overall section, you know, to support where members, you know, have indicated their support for the preliminary view. You know, and I think that needs to argue in that way to support that, but equally, if we then have a diversity of views, we'll need to reflect that. Okay, good. Right, so we move into the new section that we had this time round on living resources. And I think that's you, Amon.
Thank you, Chair. Just sorry. Okay, hello everyone. We are introducing chapter 3 on living resources for the first time. Staff used aspects of the South African discussion paper 10, which provides accounting guidance for living and non-living resources, to develop chapter 3, because the discussion paper has a similar description of natural resources to the description of natural resources in the project that we have. And the discussion paper also led to the development of a final pronouncement. Thereafter, staff have actually revised the material in the discussion paper to align with the project scope and IPSASB terminology. The discussion paper defines living resources as resources that undergo biological transformation. For example, animals and plants used to provide services, used for research, conservation, or recreation. And non-living resources are also defined in that paper as those resources that are not living, occur naturally, and are not modified by humankind. The discussion paper requires living resources to be recognized as an asset when controlled, and non-living resources to be disclosed as they may not be controlled. Therefore, the chapter 3 of the living resources takes a different approach to that, whereby living resources in the scope of the consultation paper are those that are naturally occurring and remain in their natural state, and other living resources where there's a high degree of human intervention would then presumably fall within the scope of other IPSAS. The scope section will be discussed more in the next agenda item. Does the IPSASB disagree with the approach proposed by staff to develop chapter 3?
Thanks, Simon. So I'll open for comments. Bernard.
Thanks. Actually, just a question of clarification. So what actually does human intervention mean? So in my mind, Eamon, you mentioned plants and animals. would intervention be that you kind of you have a natural resort and you manage that? Is that already intervention? Or you build a road through it, or you you know what I mean? So you build some infrastructure there. Is that already intervention? So just to get a better picture on actually what the term compromises.
Thanks, Bernard, for the question. So living resources are generally natural items. So for example, a virgin forest, natural rainforest. So once it is now, that rainforest is now cultivated, or there's fertilization of that rainforest, there's an element of human intervention, and it then falls out of scope. So we are talking about something when it's in its natural state and there hasn't been any human intervention. So by human intervention, we are talking now there's now human input to change or convert that living resources. So in the example that I've just given of the rainforest, where there's maybe fertilization or cultivation of the rainforest, then there's some element of human intervention in it.
Thanks for the question, Bernard. And you want to come back on that?
Very quickly, thanks. It really helps a lot. And I just wanted to be transparent that kind of gives me some trouble.
Yeah, I mean, I think you're right, Bernard. It's certainly, reading this, I think we have to be absolutely crystal clear as to what we mean by exploited and unexploited, and there is a very fine dividing line, and I don't think we're there yet on this in the paper, and it goes across the different topics as well. It goes across the mineral, the subsoil assets we've just talked about. It goes across this, and it goes across water, which is, where does this line start? What is the line that we're talking about? Because I think you can see the example of cultivation, but for example, if I have you know, an area that has wild animals in it, but I put a fence up, is that intervention? And I think we're going to have to be quite specific about, you know, is that just an example of something where I've built a fence and I might put the fence on my balance sheet, but actually I'm not putting the animals on my balance sheet. So I think we've probably got to go further in terms of providing a definition and a dividing line, because it kind of goes into actually what's natural and what's a resource. Mark, you in on this?
Yes, I think the question of keeping a natural state, there are some questions. So in Switzerland, we also have living animals like wolves and bears. They're coming back, and generally they are left in their natural state. But if some of them, we call them problem bears, and they get accustomed to humans, they can be shot. And the question is then, what happens with these kinds of living resources? Obviously, they are not kept in their natural state. And the paper then says, well, then we have to look at if it could be IPSAS 12 inventory, IPSAS 17, or IPSAS 27 agriculture, but I don't think that these living animals fit in one of these standards. So I think it's important to make sure that we don't have a scoping out and then a gap. And I think this is the most important thing. So depending on the definition, you must be aware that there might be a gap. And what are you doing with the gap?
Thanks, Mark. Mara, you want to come in?
I have another question. It's okay?
Yeah, go ahead.
Yes. Japan is a natural resource poor country. However, and we have so many forests. Maybe 70% of land is forest. And so forest, on the forest, government put so many public money to thin out the wood, and so the forest serves so many contributions. For example, the water resources, nourish water resources, and so how can we measure and recognize in the forest forest as the natural resources in the financial reporting, general purpose financial reporting. So in this case, the forest is agriculture, is based on the agriculture statement. This is my question.
Sorry, mute myself. I think those are good points, and I think, you know, consistent with that, probably there is a need to put further work into what is exploitation, what is not exploited, and how you differentiate, as to Mary's point, in terms of when does something become part of the agriculture standard or bearer plants or whatever. I think we do have to be very clear about those, because it's when you move from one to the other. And the question really is, at this stage, is there anything that you could recognize that doesn't fall into one of those other standards? Because, being honest, reading it at the moment, it is not clear what is left when you've put the other things into those other standards that would be a resource and could be measured. So, Amon, any thoughts on that?
Yes, Ian, that issue on recognition will actually be touched on in the next agenda item, or in agenda item 6.2.5, when you talk about control. I think in this chapter, or in this agenda item, we actually wanted to find out from the board if they were happy with our approach to developing this chapter on living resources, whereby we've used certain aspects of the discussion paper, and we've then moved to departed from it when we're just now considering items that are natural and living resources in nature. So the discussion on control, I think, would be touched on in the next agenda items that are coming.
Okay, but I think the point is actually that what we haven't got at the moment is clarity. So this is in how the chapter is being developed, that it needs to be developed in a way that actually gives people clarity about the delineation between which different topics, which different standards would you fall into. You know, the point about, for example, you know, the fencing is, for example, is that fencing, or is that actually relevant in terms of the control rate? You know, there's Mary's point about forests. Are they a living natural resource, or are they cultivated? What moves you from one part to another? So, you know, I think there is a kind of, just in general terms, what is it that might fall into that, you know, that sort of other thing, because you don't get that from the chapter as it's written at the moment. You get a lot of things that it falls here, but what's the threshold in terms of exploitation, which I think was Bernard's original point, and then just actually, what are the examples of the things that might fall into that bucket category, and then you can take a decision as to whether you control them or not. But at the moment, it's just not clear.
Okay.
Bernard and Mike.
Yeah, thanks, Ian. Maybe just a quick thought on that, and I'm aware that it's going to be quite a controversial one, but I think the question on the resource, at least to me, depends on a high degree on whether we accept that natural resources might have a public service element, which might be the generation of oxygen, or a capturing of carbon oxygen, or the contribution to biodiversity, which will be an asset in the sense that it will provide a service to the society if it is in the natural state, right? If you start harvesting it, if you start kind of using it for other types of resources, that kind of benefit goes away. And I know this kind of opens a huge box of worms for measurements and other issues, but I think that's going to be one of the resonating elements I think we have to discuss, whether or not we feel that this justifies a natural state or sort of thing to be a resource for the public.
Thanks, Bernard. I mean, it does, all of this comes back to what can you actually put on a balance sheet? What is a resource, can be recognised and can be measured with sufficient certainty. And there is a logic flow through this in the conceptual framework. Something can meet the definition of an asset, but you might not be able to put it on your balance sheet. And that is the challenge that we've got, is getting it through each of those hoops. And I think this is the point. It's the same point as with the last one, is it might be a resource, but actually can you put it on your balance sheet? That's the challenge, and that's why there's a reputational issue for us here. Okay, Mike, then Ross.
So thank you, Chair. I agree with everything that's been said, but I'm trying to help Eamon to answer the question he specifically asked us to answer. The first one is, what is a living resource? That's all he's asking us, I think. He's not asking us how do we measure it or value it or recognize it. So let's just go back to trying to decide, because if we don't work out what our living resource is, we can't then progress what the discussion is going to be. So I think 2A in 6.24 is right. A living resource should be described as something that's alive, otherwise what's the point? And B, if you remove it from its natural environment, so you take a tiger and put it back into the bush, it's no longer part of your scope. So I think my answer to his question is yes and yes. Then having answered that question, let's come back to whether we can recognize it or measure it at a later date.
Thanks, Mike. Go to Ross.
Yeah, I kind of agree with you there, Mike. I think what's coming out as well, though, is we also have living resources that we use for other purposes within our standards, and finding that line's a challenge at the moment. I think maybe part of the answer might be in looking back to subsoil resources and the structure we've already come up there. I think Ian's already touched on the need to look at this notion of exploited versus unexploited. I think anything we're calling a living resource that would be in whatever guidance we develop here should be in the unexploited box. I also think there's a need to look and to build out a little bit in this chapter the difference between the natural resources themselves and the related activities to develop. So the fence around the preservation versus the animals within the preservation. To me, those are activities or infrastructure you're building, which you'd already recognize in our standards, and then what's the purpose that you're protecting these? I think that's maybe the missing gap at the moment. We want to recognize these natural resources. What's the objective? We need to clarify that a little bit more. I think it is, and we'll probably get to that when we get to the measurement objective. I think it is the preservation aspect here, which is completely different, I think, from the subsoil chapter, where clearly where governments go to develop those at the moment, that would be more to profit from them. So I think here we're probably in a completely different objective. It is the preservation, maintenance of these, not the development and exploitation. So, but I think we can still follow that kind of framework we've set out in the subsoil chapter to around the issues that might help give us our area that we're focusing on in this particular standard, and with a little more clarity. I don't think we're going to get perfect clarity though on this one. I think it's going to be challenging, and we're going to have to make some assumptions and ask our constituents what they think.
Thanks, Ross. And I think explicitly in that, and I think this kind of comes out of perhaps some of Mari's comments as well, I think we probably need to, in making that divide in line between exploited and unexploited, there is a question about what you do about expenditure that is just conservation in nature. You know, because there would be a lot of that where you might employ rangers or somebody like that to, you know, avoid people coming in and logging a forest or something like that. So, Patricia, happy to take your comment, but I'm coming up to the break now. And what I'm going to propose is we have a session with the academic advisory group. So I'm going to pause the discussion on this chapter and we will carry on with that on Tuesday morning. So Patricia, if you can make your comment, and then I'm going to break us for coffee at that stage.
Okay, thank you. My issue, my concern is in relation to the one stage before the decide if the resources are on if the, for example, subsoil or living are or not resource, because it's necessary to identify, and the identification imply in the human intervention, because this, I think, in the regardless the objective to holding the natural resource, some kinds of activities are unnecessary. It's only the concern about the the step before. Thank you.
Thanks, Patricia. Yeah. Good. Okay, so we will carry on this discussion. I think we've got time to carry on and explore this chapter a bit more. You know, noting, and I think Ross, you gave quite a good summary of the issues that are going to be required in developing this. And I think we add essentially the comment Patricia's just made underline the need for clarity on those issues. So we'll break now for 10 minutes, back at 5 past, when we'll move into the development of the consultation paper on the work plan. Okay, thanks everyone.
1 minute warning.
Okay. So just wait a minute for a couple more members to come back on screen. Okay, so let's move off then. So this is the start of an item which will take us through to the end of tomorrow, and it falls in several segments. I'm going to do the initial introduction, and then the other item we'll cover off today will be the research program and the role of the academic advisory group. So I'm just going to share my screen at this point in time. Okay, everyone there? Good. Okay, so the parts of the session are just a recap on the 2019 to 2023 strategy. And the reason for doing this is that that strategy was set in, approved at the end of 2018, following a process of external consultation. We had a number of regional roundtables and so on. But when I sat back and thought about how we approach this item, I realized that by my count, I think only 8 members of the board were actually there and voted on that strategy and work plan. So therefore, actually, there was a need to make sure we were all up to speed on what the strategy actually is, what it comprises, and some of the subtleties in that, because that provides the framework for the consultation that we're going to do we're going to go out with this year. We're not reopening that strategy. We're adding work program items to our work program. That's the context, so we need to understand that. Second part, we're going to talk about the academic engagement and so on, and I'm very pleased that my predecessor, Andreas Bergman, is going to lead us on that session, and we'll, you can see Andreas is here with a very nice fetching photo of Switzerland, which is where Andreas is from, in the background. So that will be the second element of today. And then tomorrow we go into the update on the implementation of the strategy and work program, which is a session that Ross will lead on, and then handing over to Dave, and that will take us into the breakout sessions that we have in the middle of the session tomorrow. And those are really to get your ideas, your input, both board members, technical advisors and observers, into the projects that we should add to our work plan going forwards. And that's deliberately very much an open process, you know, in terms of the thinking at this stage within that overall context. And we'll come back together just to hear some very preliminary feedback on where people are on that, and that's tomorrow. So starting off then, and this is the context, the strategy and work plan for 2019 to 2023. As I said, it was developed through an extensive public consultation process. We had 4 regional roundtables. We had a lot of public comment in writing as well as through those roundtables. If you want to see the background to that, there is actually a feedback document on the website that shows the process and the input. But what it confirmed, and this was what we brought forward from the previous strategy, which was developed when Andreas was chairman, is that the overarching objective for the board is strengthening public financial management globally through increasing adoption of accrual-based IPSAS. What we're saying there is that IPSAS are part of that overall picture of stronger public financial management globally, necessary but not sufficient on their own. There's a lot of other things that go into that. The other area, the other thing to highlight is that we set this in the context of public interest. That's always been present in our work, but we wanted to really bring that through, you know, to the front line, if you like, to the top of the mind, because of developments that we had in 2015 and 2016 in particular. We had the introduction of the Public Interest Committee, and then in 2016, the formation of the Consultative Advisory Group, both public interest elements, and that's really changed the focus and the debate within the board, actually, since those very important developments. The strategy itself is called Delivering Global Standards, Inspiring Implementation. And that really relates, there are 5 strategic themes, but there are 2, we've grouped those in 2 ways. So themes A to C, which I'll talk about in a moment, are about delivering global standards, and then themes D and E are about inspiring implementation of IPSAS. So they both sit under that overarching aim of strengthening public financial management through increasing adoption of accrual-based IPSAS. But we have those 2 distinct areas. And if you like, the way you know, and the delivering global standards is directly under our control. That's us as a standard setter. Inspiring implementation is us working with others, and I'll explain a bit more about that. The other thing I think it's useful to think about in the context of those 2 areas of work is delivering global standards. That's about the guidance. That guidance needs to be useful. It needs to be capable of being used in the real world in order to actually help strengthen public financial management. So yes, you're looking at meeting users' needs, but above all, you need guidance that those preparing the financial statements can use in practice to address the very complex issues that they face in preparing information that makes the public sector accountable and transparent, and that is useful for decision making. So I think useful is a really important watchword for us to think about. And then inspiring implementation, that's about getting the standards used. So it's about expanding the usage of those, and also about that information not only being used for financial reporting purposes, but for other decision making and accountability purposes. We'll talk a bit more about that. in a minute. So if we first focus on delivering global standards and how we select our projects. And in one of the areas we consulted on was these criteria. So these were decided through that extensive public consultation process. And we decided these were the ones that we used to select the additional projects we added at the end of 2018, but it was also decided at that point in time that these would be the criteria that we would use for the projects to be added for the mid-period when we did this mid-period check-in. And we picked these four. You know, if we perhaps think just for a moment, we've added the project on, you know, reporting on retirement plans earlier on this week. And if you sort of think about that project, you know, prevalence, is this an issue that's widespread globally? Now, in that case, yes, there are a multiplicity of arrangements around the world. Very often they are through multi-employer plans. There's a clear question as to exactly what happens around the world at the moment, but there's no doubt that there's an issue here. Consequences. Does that impair the ability of the financial statements to provide information that's useful for accountability and decision making? Well, you know, going back to the discussion that we had, actually, if these schemes are material and, you know, that information is not visible, it's certainly the costs of pension schemes are certainly going to be cool on future tax revenues to the extent that they are, that's money that is not available for other activities. So there are consequences if these things are not made transparent in the consolidated financial statements for the federal government or state government. In that case, urgency, well, actually, the use of balance sheets has come much more into focus recently, and sustainability is going to be a real issue given the extent of the expenditures in relation to the pandemic. I think I heard a figure of 14 trillion mentioned recently. So these numbers are huge, but in the context of this project, the fact that you've already committed to pay pensions and those numbers are significant, actually, you know, making that transparent and getting a handle on those numbers, actually, I would argue, is more urgent. Feasibility, we've chosen to adapt IAS 26. We will also, in adapting it, draw on the experience of those jurisdictions that have actually already implemented accrual accounting for those types of pension plans. And that helps us to do this. So it's not that we're doing a major conceptual project on this. Actually, we have a standard. We know there are issues with it, but we can fix those issues through drawing on the experience of national standard assessors. So that would, you know, that's an example of how you might think about those apply those prioritization criteria in thinking about a new project. So coming to the themes then. So we set three themes for our work on delivering global standards. And although we did have a debate at the time about should we number these strategic themes, and we came to the conclusion that no, they are all important, and therefore we didn't want a priority. But there is no doubt that setting standards on public sector specific issues actually is the key focus for us as a board focusing on public accountability issues. And when you look at where we focus our agenda time, this is really the sort of the most important area for us. But having said that, in terms of how we do it, well, we do have theme B, maintaining IFRS alignment. And if you read the discussion in the strategy, it talks about this very often, and you can see this in the pension plan example I've just given you. actually it's a way of getting to guidance for the public sector, but getting there quicker than if we develop something on a greenfield basis. Now, there are debates about the relevance of IFRS in various different jurisdictions, but the fundamental premise that the board's always gone on is if the transaction is essentially the same as in the private sector, then you should actually use the same approach. We might change the terminology, we might add new examples, we might need to adapt in certain circumstances. But if it's the same economic phenomena or there's an overlap, then we should draw on that guidance from the private sector. Theme C we will discuss in more detail tomorrow, because there's no doubt that with all the discussion and debate about sustainability reporting, this has become a lot more important. There's no doubt about the fact that the relevance of and the general purpose financial statements and tying them more into those broader needs has been a topic for a while. Whether you're looking at integrated reporting, sustainability reporting, or whether you're just looking at the usage of information for decision-making purposes, that contextual information is important. So that was why we adopted that, and that's that broader information that sits outside the narrow general purpose financial statements. So what do we decide in work plan terms moving the strategy forward? So under theme A, we added the project on natural resources that we've just been talking about before the break. And that was clearly, in terms of potential projects, that clearly was top of the list. We added the conceptual framework, the limited scope update there, because when we finalised our own conceptual framework in 2014, at that stage the ISB was working on its conceptual framework, and it didn't actually publish the amendments to its conceptual framework until 2018. Now, our framework is our framework. It supports us in our work as a public sector board setting standards for the public sector, but where it's the concepts are can go across between sectors, the view we took was that we should use the same concepts if those are appropriate. And if you look at, for example, the chapter on qualitative characteristics, a lot of that is material and ideas that come across from the ISB's own framework. But nevertheless, there are some differences. And also we were cognizant of the fact that we were adding a project on measurement. And so, we're about to publish the substantive standard on measurement, but we've had to make changes to our own conceptual framework to bring in fair value. So that was the rationale behind those two projects. Theme B, we inevitably do annual improvements. That's not just to keep up with changes in IFRS, where we identify the need for updates and changes in our own standards. We can do that through the annual improvements process, but very important that we keep up to date with changes in IFRS from a point of view of those constituents that have mixed groups, where they have some state-owned enterprises that they consolidate in that are using IFRS, that those standards are compatible then with our own standards. And we recognise the fact that we would have times when we could pick up additional projects on a limited basis in order to bring relevant literature into our own framework through a limited scope review. And we had an example of that last year. We picked up IFRS 5 on assets available for sale and discontinued activities. We've also picked up through this meeting the drawing in the guidance on retirement plans currently in IS 26 through that route. Theme C, we said we would actively monitor developments. In many respects, as we'll discuss tomorrow, the pace has picked up considerably on this in recent years. But the important thing was, whilst we acknowledged the importance of that, actually we felt that it was more urgent to get on with the other projects and to complete our current work programme at that stage, rather than to push forward on any specific projects. We did introduce the idea of a research programme, and that's very much the context for the next discussion. And we did commit to the mid-period review in terms of recognising the fact that we would complete the projects that were started largely in 2015 and subsequent years that were approved through that work programme consultation. Those would come to fruition during 2021 and 2022, and we still see that. So that's the rationale for looking to add projects in 2022 and 2023 through this process. So that's themes A to C on delivering global standards. Then if we look at inspiring implementation, this splits into two themes. Theme D, which is around adoption and implementation at national level and encouraging that. And one of the things that came out through our strategy is this difference between adoption and implementation. Quite often you find that adoption, which is the process of committing to move to accrual, actually a lot of governments actually are fine to commit to that. Actually making that happen, implementing the standards, is often a very different process that demands a lot of time, expenditure, effort, and so on. And quite often you find that there is, you find jurisdictions that get stuck along the journey if they make it past that adoption process. I remember an example of one jurisdiction I went to that, way back in I think 2007, announced they were moving to IPSASB within a year and were still waiting. So, that's not atypical. So there's a promotion activity, and if you look across this table, the idea is that we are one player in this. There's a lot of other important parties, and actually at a jurisdiction level, those parties are often much more influential and will have a very big impact on what happens and the way it happens. So if you look across the table, we've identified professional accountancy organisations, PAOs, IFAC, International Federation of Accountants, supporting them, governments, clear decision makers, major influencers. A lot of this work is often contracted out. And then in terms of encouragement to make reforms and funding for reforms, you get the supranational and regional organisations. So World Bank, regional development banks like ADB, the Inter-American Development Bank in Latin America. And then you get the auditors, and very often there's support, both in terms of adoption and then implementation from the Supreme Audit Institution, is a real critical swing factor. I know personally that the involvement of the National Audit Office in the UK was a very strong component in our implementation, and you really need to work with the National Audit, your Supreme Audit Institution, to make the implementation work. All of those different players can be involved in various different ways, but if you look at the column, the IPSASB column, you'll see that actually we're a relatively small player in that, because we set the standards. We can clearly advocate, as we always do, for their implementation. We can provide technical guidance in terms of implementing our standards, but in terms of the move to accrual, introducing the systems, developing the capacity, financial support and so on, those all have to come from other players, and bringing those together can be really challenging. Again, so there's a lot of different parts in terms of that theme D. And then theme E, the final one, which is again on the theme of the information being used. And really the principle behind this slide is that it's not enough to prepare a set of accounts. that's certainly helpful in terms of being accountable, but what are you being accountable for? And this is where really the idea is that the accrual information should be used for as many purposes as possible, principally for decision making. So that may mean that, or that, you know, getting that used as part of the government finance statistics is really important, because the overall spending decisions, the overall shape of the public finances, those decisions get influenced by the macroeconomists, and they use government finance statistics principally for that when you go around the world. And then the policy and the budget, how do you carve up those overall decisions amongst individual institutions? Again, if you use the accrual information, then the principle of what gets measured gets managed becomes very important. So if you don't use the accrual accounting information for anything other than the year-end accounts, what is being measured? What are you accountable for if it's on different frameworks? You know, you can see that you need those reforms to act together. We implemented accrual accounts in the UK first, but in order to really make accrual into the way that the public finances were managed, we needed accrual budgeting, we needed estimates to Parliament to be on an accrual basis, and we needed all of those to be brought together. And then we needed the top level picture that whole of government accounts provides. So you can see in terms of users of the information, the legislature, clearly very important, really as on behalf of society and users more broadly very often. Then use of the information, if you look at the financial markets, government bonds are a very large component of trading around the world, but very rare that the financial accounts are actually used, even despite the information that that can provide. And the fact that a complete balance sheet gives you a complete audited balance sheet gives you a much better picture of the public finances than a narrow net debt figure. And that's something where we're working with, for example, an organisation called the Emerging Markets Investors Alliance, who are trying to promote better practice in use of accrual information for decision making. And then the international and regional organisations, they have a real role in promotion, but they also have a role in terms of encouraging use. You know, an IMF fiscal statistics or European system of accounts information are very important in the decision making in those areas. And the more that those decisions can be supported by actual audited bottom-up information, the better. And so really the work that we're doing in those spaces is very much directed at making sure that the information that's prepared using accrual-based information, ideally prepared under IPSAS, is useful for those purposes and is used for those purposes. So I think at that point in time, I'm going to stop sharing my screen, and I'll ask if there are any comments, questions, observations on what I've said on the board strategy, which is the framework for our discussion. Okay, that's good. So I'm never sure whether no questions means I've been absolutely totally comprehensive. You're very happy with everything, or it just means that it's getting late in the session. But anyway, we thought it was useful just to set that context. Very happy to take questions and so on. But if you like, that was very much a scene setter. So what I'd like to do now is move then into the session, which is looking at what's happened in terms of the research programme since 2019. And the very important component of that was that originally we thought that the work would be undertaken with partner organisations, national standard setters and so on. In the end, that didn't work out. And actually, this is where we we took the decision to actually commission some academic research, and linked to that, the formation of the academic advisory group was a really key development. Now, we'd always had engagement with the academic community, and I think indeed Andreas Bergman, who was my predecessor as chair, he was chair during the development of the conceptual framework for 6 years, from 2010 to the end of 2015. Andreas's background is he's a professor at the Zurich University of Applied Sciences School of Management and Law. So Andreas was always very strong on the links with academia, but that had always been, you know, perhaps slightly diffuse, and this was really where the formation of the academic advisory group has been one of the very important developments of the last few years. And having worked with Andreas very closely as a board member for those 6 years, I was delighted when Andreas agreed that he would become the inaugural chair for the academic advisory group, not least because in addition to being professor at ZHAW, Andreas has been tremendously active and leads a team that have been very active in supporting implementation, particularly in Latin America, where I think Andreas has superstar status actually, but also in sort of Asia and Africa. So with that, Andreas, delighted to hand over to you to lead the next segment.
Thank you very much, and it's really a pleasure for being back after so many years to the board table, although this table has converted into a screen in the meantime and is slightly different in terms of the experience. But without much further ado, may I ask you to bring up perhaps the slides, which will help me to give a short introduction into the topic, although I really would like to spend as much time as possible on the research papers. Nevertheless, I would like to give a bit of feedback, of a background, excuse me, on where we come from and what this academic engagement initiatives look like, but then really talk about the papers. So really the background is, as Ian has said, that the current strategy and work plan have identified the need to look at some projects which are not yet in active work status, but which might become active projects in the next phase. So really the objective is to do research, to do a bit of scoping before actually deciding on whether a project comes onto the active work plan or perhaps not. And that's really where we are right now with the wider agenda item this afternoon and tomorrow morning, and of course also in previous and later sessions. Next slide, please. So in terms of academic engagement, I think it is really some new things that have happened since late 2019. We had prior to that, and it's not on the slide, but it's worth mentioning, we had an IPSASB research forum, which was held in Naples in Italy, and which was exactly for the same purpose, but slightly more informal. So towards the end of 2019, Ian came up with the idea that perhaps we need to have something a bit more formal, a bit more clear on its objectives and also on the work being done. And that's where we started forming the academic advisory group, and I will introduce the members just on the next slide. But before that, I really would like to talk about a call for papers. So for the very first time, IPSASB in November 2019 issued a call for papers, which is nothing unusual in the academic community, but which was a first time event for IPSASB as a standard setter. And actually, it was a call for abstracts, so a call for short pieces of text, not for full papers, based on the potential future work plan. And IPSASB identified 4 topics on which research might be interesting. Presentation of financial statements, differential reporting for small and medium-sized entities, discount rates, and also the disclosure of tax expenditures. And you might wonder what happened to the last one. Well, we of course we got a very good feedback from the academic community. We received more than 30 abstracts, but they were not equally distributed amongst the 4 topics. Very clearly, topic 1 and topic 2, presentation and differential reporting, received much more interest than the 3rd and the 4th topic. And indeed, for the 4th topic, we did not receive any proposals which appeared to be adequate for the purpose of IPSASB and the type of question IPSASB has. So that's why we decided at this stage to only ask for the preparation of 3 papers, the first 3 ones, and these are also the ones which are now in front of you. Next slide, please. Now, in the process of development, well, firstly, perhaps just to tell you about the details of the financials of this undertaking, those 3 abstracts, or the authors of those 3 abstracts, received a huge grant of $1,500 each. Now, this is very clearly not paying them to develop the paper. It was rather sort of an incentive to show the appreciation for the work. Of course, the development of such an academic paper takes much more work and is much more costly actually than $1,500, but it's a token of appreciation towards the authors. In June 2020, so in the middle of last year, they all presented the papers at the 2nd IPSASB Research Forum, which was held in the context of CIGAR network, which is not related to smoking, but which is the network of comparative international governmental accounting research. And they received feedback, of course, and finalized based on that feedback, together with comments provided by the academic advisory group and staff until the end of January this year, 2021, and that's now the papers which are in front of you. Next slide. And before we go into the papers, just very briefly, who are now the members of this famous academic advisory group? Of course, 2 of them are extremely well known to you because they are actually IPSAS board members, Patricia and Scott. But of course, they are also in their daily life academics, so they work for academic institutions, are professors teaching public sector accounting, and they are also active members of this advisory group. Another member, perhaps some of you might know, is Francesco Capalbo. He is a former IPSASB member, actually, and also an academic from the University of Molise in Italy. He held the first conference, the one I mentioned before. And then we have perhaps 2 members which are not that well known. We have Susana Jorge. She's a professor at the University of Coimbra in Portugal, and she's the CIGAR president, actually. So she's leading that academic network. And Maria Francesca Sicilia, she is a professor at the University of Bergamo in Italy, and she's representing IRSPM and EGPA, 2 other networks in that field, academic networks to be precise. So really at this stage, I would like to thank all those members for their work, and it was very important to have their input and see their views in the development of these papers. However, with that, I really would like to perhaps to move on to the papers, because that's the beef. I mean, that's where we really have something to discuss. And I'm really pleased to have 5 of the 6 authors present. So they are here, and perhaps you can actually turn on your cameras at this stage. So in the interest that people can see your faces, we have here Anne-Marie Conrad Hargraves. Sonia Wüstemann had to send her apologies, but Anne-Marie is present. We also have with us Berit Adam and Jens Heiling. And we do also have with us Odd Stallebrink and Pierre Donatella, the authors of the third paper. I will now introduce the three papers very briefly. I take them as read because it's, of course, they're quite extensive, and I'm not giving a full presentation of the papers. But really, the authors are here present, and if you have any specific questions, they are more than pleased to answer your questions. Now, firstly, the presentation of financial statements paper is an experimental paper, and perhaps before I go into that, you may wonder, what is actually the purpose of such academic research? And the purpose is really to give insights in some specific issues related to something. It's not sort of a consultancy contract where you receive all the answers you're asking for, but they focus on certain aspects. And the paper presented by Anne-Marie and Sonia is actually an experimental paper. So they did an experiment presenting financial statements under IFRS, including other comprehensive income, under IPSAS, our traditional way, how we present them according to IPSAS 1, and according to GFS, the Government Finance Statistics Manual. And asked them for their reactions and which one they prefer. They also moderated the stimulus, so they introduced them to two scenarios in which those financial statements could be used for accountability or for decision-making purposes, and had a look whether this changed their views. And the result is really quite amazing. Firstly, they did not find any differences between jurisdictions, so it doesn't seem to be a jurisdictional issue how the financial statements are perceived. But then they also found out that actually what they call lay experts, they could actually be key to the use of those financial statements because they are also perhaps slightly more likely to change their perception. So it is very interesting to have those results whenever IPSASB will start talking about, for instance, including OCI into IPSAS 1 or not. And I think that was the purpose of that paper, and I find this really a very, very strong and excellent paper. Thank you, Anne-Marie and Sonia. The second one, differential reporting, is actually a different research approach. It is a comparative research approach. So Berit and Jens looked at different countries, different jurisdictions, how they do or do not address actually financial reporting of smaller entities. These can be national ones or can be subnational ones like local governments. And it was quite interesting actually to find that it is really predominantly developed countries which have such a differential approach, while developing countries less have such differences, in contrast to, for instance, the private sector. And it was also quite interesting to see in what those differential reporting standards differed, and it was really mainly the materiality of certain issues, the number of options given, and perhaps also the disclosures, but really less the recognition and measurement of the items on the financial statements. Finally, and this is really my very last point before I would like to open up the discussion then, discount rates. Odd and Pierre looked at opportunistic accounting choices. So that's not something you'll find in your standards or in our standards. It's of course interest rate, the application or the determination of the interest rate of the discount rate is an accounting choice which can influence the presentation of, for instance, pension liabilities. And they investigated whether certain factors contribute to such choices. And it was quite interesting to see that state-administrated plans, as well as those plans in highly unionized jurisdictions are more likely to be subject to opportunistic accounting choices in terms of interest rate than others. And in contrast, and I think this is very pleasing to IFAC also and to other sister boards of IPSASB, that actually the use of CPAs, of qualified auditors, did help to limit opportunistic accounting choices. So this brings me to the last slide, which is actually what I would like to discuss with you. Well, firstly, is there any reaction on academic engagements in general? And then really perhaps, do you have any specific issues and questions for in respect of those papers? And I once again would like to mention that the authors are present. So if you would like to ask questions to the authors, this is the very moment to do so. And with that, I hand back to Ian. Thank you very much.
So thank you very much, Andreas, for that scene setting. And I think just before we open up for comments, just on behalf of the board, to thank the authors for those very interesting and insightful papers. I think we really do appreciate that. And in a way, a slight apology from us as well, that we had hoped that you would be able to present your papers to the board in person, and unfortunately that's been a casualty of the move to the virtual environment, that we've got this Q&A session rather than the full report back. But we nonetheless do very much appreciate your research, and I also just want to say thank you to the academic advisory group and Andreas in particular for chairing that, for the time and effort that you've put in, as well as to record our thanks to Gwenda and also Vanessa Mello on the IPSASB staff for supporting the group very well. So thank you everyone for your input. And I think at that point, we should open up for comments on those two areas that Andreas highlighted, both the research program as a whole, and also sort of thinking forwards to our discussions tomorrow, your thinking on the application of that research in terms of thinking about potential projects to add to the work plan. So with that, open up for comments from board members on either of those topics. So I've got Mike first and then Ajith.
Thank you, Chair, and thank you, Andreas. Good to see you. I was fortunate enough to listen to the whole of that session in Norway 8 or 9 months ago, and I found that the subject's very interesting, and so I'm very supportive of the program of research activity that the IPSASB is trying to do. It's something we do in Australia, have done for a while, and I think it's essential that we have engagement with the academic sector. A question for you, Andreas, and perhaps the authors of the two of those projects, the presentation and discount rates. Did those projects explicitly identify gaps in our standards that we need to address? And I think those two are the ones that I'm really keen to pursue. But I was more keen to say, is there something missing that we really need to address in an urgent way?
Andreas?
Well, I think talking about the first paper, I think it was not the purpose to identify gaps. It was rather to compare how the users perceive IFRS style statements with OCI and IPSAS style statements without OCI, and GFS statements with their own style. And I think it is that was the purpose of the paper. So not to identify gaps. It's rather a question which is perceived in which way. But Anne-Marie can correct me right in the moment on that. In terms of the interest rate paper, perhaps, yes, there is certainly some insight what is relevant. And for instance, I think audit is certainly something which is relevant. Now, IPSASB does not include audit requirements in in those standards, but I think it is quite interesting to see what Odd and Pierre found out. But again, perhaps I hand over to Anne-Marie and then to Odd to comment themselves.
Thank you, Andreas, and thanks for the very kind words before, and also thanks again to the IPSASB for enabling us to do this research. Yeah, if I may answer your question, Mike. So I would say the one word that came often from our interviewees when they looked at the IPSASB template was the word information overload. So lots of interviewees preferred the structure of the IFRS OCI component compared to the sort of net assets displayed, just on how the information was presented. That I think might be able to help the IPSASB if you are going to think of working on this, that even if you don't go with the OCI option, you might want to consider if it might be worth restructuring how much information is really necessary to be displayed, given that you also have sort of the net assets income being displayed. If I may just add two very brief comments to what Andreas perfectly summarized, was two really interesting findings that we also made that might be practically relevant, and I know the paper is very long and very academic, is that we actually found that multiple professional experts, and especially those from Germany who we know are often reluctant towards IPSAS, towards the IFRS and towards IPSAS therefore, because of their IFRS alignment, they sort of in the beginning of the interview would emphasize this IFRS reluctance and how bad IFRS are and so forth. But then when shown the three templates, which were not labeled, they actually preferred the OCI template. So that was really interesting because it was a very contrasting finding that might be helpful for you. And the other one was that we found, sadly somehow, that professional experts with a statistical accounting background that were working for the big rating agencies that had told us that they regularly work with financial reporting information, were not familiar with either the IFRS template nor the IPSAS template when we presented them with that. So that's just to add on. Thank you.
Thanks very much, Anne-Marie. Very interesting.
Perhaps Odd.
Yeah.
Odd, you're on mute. Please unmute your microphone.
Sorry. I think. Well, let me also take the opportunity to thank IPSASB for encouraging us to move forward with this project, and I think it's an excellent venue to further connect the academic community with some of the activities that IPSAS is doing. So I was thinking a little bit about how this paper really relates to IPSAS activities. I think it, some of the findings underscore some of the standards that are already in place. I know Andreas has pointed to the value of CPAs, and I know IPSAS 39 has language that encourages professional involvement in the measurement process. Another finding that might be relevant to think about in terms of encouraging certain type of things as part of accounting standards is this finding that politics has a way to find itself into the accounting process in certain within certain contexts. It might be maybe there is something to consider in trying to find ways to encourage, ways to shield the accounting process from political influence, perhaps necessary. And then the final thing I think that is relevant is that we find that there are a lot of contextual factors that play in to the accounting measurement process and the use of this so-called opportunistic accounting choices. And it kind of, the findings kind of underscores the approach that IPSASB has taken in terms of providing discretion in determining the discount rate. It's much more constrained than you see in the United States, where which is the context where the study is conducted. So I think so in summary, then we underscore some of the activities and standards already in place, and I think it provides a little bit of a direction of how maybe to extend upon those standards. So thank you.
Thanks, Odd. And I think that's very interesting in terms of what you were saying in terms of choices and so on, because I think that underlies the rationale for having international standards, those being set by an independent standard setting board, bringing together the expertise that we do have. And when you look at the implementation of the standards around the world, I think that's similar to IFRS has found this, that actually really what we should be encouraging is direct adoption of the standards, because that removes those standards from the local political process. The more there are modifications and so on for the local context, the more potential there is for that, those sorts of more political influences to operate on the process. I think, Mike, back to your point, your original point, and then we'll go to Ajit as well. Probably what this, the research underlines is not per se that we have a gap in IPSAS-1, but actually it underlines the age of IPSAS-1, the issues around not having OCI, and also, is there an opportunity to make that standard more useful in the context of jurisdictions wanting to place a higher priority on information for GFS, and also to link better in with the budget process? We know jurisdictions have to bring in particular subheadings and so on to try and bridge. So a lot of those influences come into bear in terms of making the standards useful and then used. So I've got Ajit and then Mark.
Thanks, Ian. I found the research papers quite interesting and useful, and I think this will be very useful for the board, the research papers, and I think it's a good way to go forward in using research papers for this kind of work. I also found topics that are selected quite interesting, and particularly I found two areas, which is presentation of financial statements and differential reporting, both very useful and interesting. The presentation of financials, in looking at the presentation of financial statement, the use of non-experts to see how they look at the financial statements was also very interesting aspect of the report, and but the finding was very interesting, and that non-experts found it useful to have the other comprehensive income in the financial statements. There's also a lot of items that go into the surplus and net assets, equity or net assets, without going into the profit and loss statement or the performance statement, and these are missing out in the other by not having the other comprehensive income. We don't see directly, we see it only through the changes in equity statement. So that's a very interesting area, and I think it's an area that we need to probably move into. The other paper I found interesting was the differential reporting, and I noticed that in your studies that you have looked at some of the European countries and Asian and African countries, and noticed that some of the European countries are using differential reporting and not so much in Asian and African countries. But I'm coming from Sri Lanka, and we have used differential reporting quite in a big way for financial reporting, the public sector. We have got separate standards for the local authorities, because local authorities didn't have the expertise to look at financial reporting in the manner that SARS wanted, with so many complications, including discounted cash flows, actuarial valuations, fair valuations. So we removed all those things and brought the standard to look like something that was there, say, about 30, 40 years ago. And the standard that were used by big companies at that time. So we are from Asia, and we have used differential reporting in a very significant way, and it has been quite useful in bringing some of the entities that would have otherwise never have thought of going to accrual accounting. So I think that's an important area. So thank you. I think the research paper was very interesting and very useful. Thank you very much.
Thanks, Roger. So Mark, if I go to you next.
Also from my side, congratulations for these great papers, and it shows that this program is a success, and it's very informative. I have two comments on the first one, differential reporting. It was very interesting to see that the conclusion of the authors are similar conclusions as we have made, as based that it should rather be principle based. Also that the materiality taken into account, and there are differences in the public sectors concerning the needs compared to the private sector. This was very interesting insight. And concerning the presentation of financial statements, I also found it very, very useful. Also the inclusion of these lay experts. I mean, if you think of our stakeholders, I mean, this gives a better representation, obviously, of the stakeholders, and it's always important to know their views. And I think the lay experts take a very important role there. And what was also very interesting that the GFS framework was included in this research, because from my side, having now working for statistics, but having an accounting background, it is always a question. I also had my experiences from moving from the IPSAS framework to the GFS model. And there, one question I have is the people who were interviewed, what is the share of the statisticians? And it would be interesting to see what statisticians who were used to the IMF framework, how their views changed or didn't change concerning the private sector or public sector, and vice versa, of course. That would also be of interest. Thank you very much.
Thanks, Mark. So go to you, Anne-Marie, first, and then perhaps if I can just offer Jens and Berit an opportunity to add anything on differential reporting based on what you've heard.
Many thanks for the question, Mark. Really interesting ones. So interestingly, we only had one person that worked in one of the big rating agencies that had a financial reporting background. He was from the UK and used to be working in the HM Treasury, so quite close also to the public sector, but he had a CPA qualification, so very close to the IFRS, and obviously in the UK they work with the IFRS in the public sector, and he was quite critical actually of the OCI component due to his experience, also previously working in the private sector before he moved into the HM Treasury. The rest of our interviewees all had a statistical accounting background, and they kept on emphasizing that they include all information when they make their assessment of the rating. But what sort of became clear throughout is that they were not able to recognize the GFS template as the GFS template, nor were they able to recognize the IFRS nor the IPSAS template. And what was sort of revealed in the interviews was that each rating agency seems to have their own template where they feed information into, and then they sort of come up with their own balance sheet and their own calculations. And that was really interesting to see, and it might be worthwhile to engage with obviously the rating agencies to see how these balance sheets came up. We tried to push them a bit on that, but they were quite guarded when it came to that. And but they were quite, besides that one person that had the explicit background in financial reporting based on his work in the private sector and as with the HM Treasury, they were quite open to using the OCI or the IFRS. They didn't make a differentiation really between the private and the public sector, also with regards to the rating. And even the person with the financial reporting background said that in terms of the rating process, he sees no difference between the two sectors. I hope this helps.
Yeah, really, really interesting. Just then, Jens and or Berit, I don't know if either of you wants to comment on anything that you've heard in terms of Ajif's comments or Mark's comments.
Yeah, Thanks a lot, Ian. So Berit asked me to speak. So also from my side, many thanks for the IPSASB that we had a chance to really conduct this research that actually goes back to the discussions that were taking place during the IPSAS discussions within Europe. So to create European public sector accounting standards. And already at that time, there was some research going on from Eurostat in that direction. And Ajit, so taking your points, so we also saw in our research that it's less the national governments providing relief to smaller and medium-sized entities. It's really more at the local level that we saw that relief is provided. And maybe touching on your second point, you noted that it is especially the European countries providing a differential reporting regime. And so we found this is maybe due to the discussions going on in Europe at the moment. And what we saw, for example, was the case of Portugal. And in Portugal, we even found that there is a third category of small entities. So you can say a micro sized category of entities where relief is provided. So based a little bit on our findings, we think that Portugal is actually a good case study to look further in on how they have approached the differential reporting. Thanks.
Thanks, Jens. I mean, I think, you know, what goes across all of those three projects is actually the value that we as a board can get from both those, you know, that independent perspective, but also that connection out into, you know, the broader community, the access to users and that perspective. And I think, you know, I'd like to endorse what, you know, fellow board members have said, that I think that really provides a much richer picture of what's going on in those, you know, those three areas. So I think from the board point of view, it does feel like this has actually been a very successful first venture into this area. And I think it's something that we as a board would like to carry on that partnership. You know, I can see nods from my fellow board members on that. I think, you know, it could be tremendously valuable as we take our work forward. So again, thank you very much to the authors. Thank you for taking the time to join us today. Apologies, because of the virtual environment, we couldn't allow more time to explore the issues. But I suspect if we take those projects forward, then we will certainly be wanting to engage you further. And I think, you know, just thank you for that. And I think, you know, again, thank you to the academic advisory group for the role and staff in particular for supporting that, you know, for really taking this forward. I think it has been very successful. I think we have proof of concept, and I think now the question for us is actually how we take it forward into the next stage. But again, thank you very much for that. So I think probably with that, I should wrap up the session for this morning. Very much those were tasters for the discussions that we will have tomorrow in terms of beginning to think now, well, okay, what projects might we be thinking about recommending? As I said, there'll be some further input to begin with, and then you get the opportunity to express your views through the breakout sessions tomorrow morning, and then we'll just have a final session at the end just to get a feeling for what has been said. So with that, I close this morning. Thank you very much for a good discussion on natural resources and good first step in terms of the consultation plan. If I could ask those board members who are going to be